everybody, it's Christian from Serene Education with the 4 majors analyst update for the 11th of June 2013. Okay, this morning doing the 4 majors using our FX8 template, which is on the bottom right hand corner, and starting with the euro against US dollar on our daily time frame. So let's have a look and see what's been happening. We weren't here yesterday because we were doing a mentorship with some students, and we had a nice time yesterday. Had to wait until late afternoon. However, we got our movement eventually on the euro, and it's clearly been up to the upside. The one thing to see here and to be well aware of is the fact that we had this bullish engulfing candle last week, end of week, which has taken us above this major support and resistance level that we had recently here at the monthly February retracement area in the shape of the 38.2. And then we saw the pullback at the 50% retracement from our daily time frame, from the high that we had currently here in January to the low that we've seen here in March. And then we had the follow through yesterday up to these levels, and now where price is trading is above the 50% line, and now our next target should be roughly around the 61.8, which is at the 133611 mark. You can see how the majority of the indicator box is blue, and most importantly we're getting that upside. So very, very important. The RMO in particular, all above bar the 5 minute, all looking long, and the moving average, institution moving average downstairs complementing, besides the weekly, pretty much blue across the board. R squared intraday is blue, and the blue sentiment intraday is obviously been complemented with the upside, which is fantastic. RMO, the indicator itself on the daily, is above the zero, MACD as well, but in this consolidated range you can see that we've started to see a pullback, and that's going to happen likely with the breakout. We're seeing that consolidation, now we're seeing the extension to the upside. So if I go to a 4-hour time frame, you can see that prices has been finding support above that and moving tentatively to the upside and attempting these highs. Ideally, for the remainder of today in particular, if you want to take the highs, the body highs, as your support, intraday support, and as long as price stays above that, then ultimately we should be targeting back towards that 61.8, or not back, to the upside, apologies. And we're looking roughly at 81 pips or 80 pips. Take away your spread, you're looking just below the 80 mark in terms of your profit. Okay, so look for longs intraday. Let's see if this particular area here at the 13257 remains as support. Go to an hourly to see that. There we go. Straight away I get a buying opportunity on my hourly. You look at the hourly time frame and everything is positive. The hourly and the daily are the only ones that are really truly positive. There are 1 or 2 other areas where there's red arrows, but you can see quite clearly that we are trading above a prior resistance level. As long as we find support above here now, look to see if we can get a nice bullish engulfing candle. Price has to make higher swings in order to be looking profitable or trend like to the upside. Look to see if we can get a bullish engulfing candle, and then we can target that all important 61.8 here, which is roughly around the 13338 mark and a good 80 pips away. Moving on to sterling, good old cable. You can see quite clearly on the daily, price moving very aggressively just recently, most of last week in particular. However, coming and stuck at the prior resistance level here in the shape of the 50% retracement on our weekly time frame, trading above the 23.6 on a monthly, which is good. So buying sentiment coming through, RMO above the zero, MACD very much above the zero low, but we are going into this institution moving average now on our daily. You can quite clearly see that the MACD has looked bearish. We're seeing consolidation on the MACD, and that's primarily because we're moving not only into a prior major high here, but also the institution. So to see any further extensions to the upside or continuation to the upside for this particular pair, we would need to see a daily close above the institution moving average. So not trading sterling today until we get that close above, or for the foreseeable future until we get that close above, because what could happen primarily is the fact that we could end up with a bearish engulfing candle as we head into this very strong resistance, and then price could revert back to the downside again, potentially moving back towards the 38.2 level, which is below us at the moment, and a good, if I just work it out, 176 pips to the downside. But so if you look at the 4 hour, just move that over so you can see it. You quite clearly see the 50% retracement area here on my daily time frame, from our highs that we saw in January to the lows we've seen recently in May. You can see that the 50% line is in play now, and the candlesticks are quite small. So if anyone's in any trades, I would presume that you have moved your stop up to the prior low here. If you haven't, do so, because we are trading into a daily major resistance level in the shape of the institution, but also prior support and resistance level high. So we want to see a bullish engulfing candle close higher to confirm this is no longer a resistance level, but we're looking for a potential continuation to this trend. And then once we do that, we look for an opportunity to enter, and then we'll start looking at the upside being our bias towards a 61.8, which is from where the 50% retracement is to the 61.8. You're looking at 176 pips to that level. So there's more than enough on the chart to actually be profitable from. So you just got to wait patiently for a nice bullish engulfing candle break above this 50%, above on the daily, and then we should head higher for the remainder of this week. On to the US dollar Swiss franc. Here again we saw price failing. The US dollar Fed announcement with quantitative easing potentially tapering that purchasing plan the previous week, and sure enough we saw resistance here at the 23.6 Feb monthly retracement area. Price has reverted to the downside in doing so, tackling a prior major support and resistance level here at the 95.290 mark, and breaking below that with a lot of sentiment pullback, and then the continuation down to the next level, which would be in our 23.6, which is on our weekly time frame, which is down here at this consolidation. Now you can see the bounce. We actually see a pullback because people who had actually targeted the selling over here would have taken this level over here as a major support and resistance level target, and showing up going into here, taking a bit of profit, and we've seen a pullback. We saw yesterday's candle not really moving any higher on the pullback, so potentially only moving back, but not even 23.6 of that yet, to 23.6. Look at that. So telling us there's sentiment recently, genuine negativity in the market. So what we want to see is a genuine close lower, nice bearish engulfing candle close lower than the 23.6. And if we do see that, then ultimately we're going to head back towards that 38.2, which is a nice, from where we are at the entry here at the 23.6 to that 38.2, you're looking at a good 420 pips. So there's more than enough on this particular this particular chart or trade setup to warrant taking a trade, but we would need to see a nice bearish engulfing candle close lower, because as it stands on now on the daily, we have a red arrow, red candles, MACD's red, RMO's below the zero. The only thing we don't have in our favor, well, the RMO is to a degree red, but I like to see a full red to complement the institution moving average indicator down the bottom here, and then we'll start seeing that negativity coming through on our 5, 15, 13 and hourly mark, just to confirm that. At the moment now, there's a bit too much blue on our smaller time frames, including that we've got the R squared not working with us on a couple of time frames. 15 and 30 minutes, there seems to be more buying, and you can see the upside. The bias on this particular day, you can see we're trading the upper end of this daily candle range. So as it stands at the moment now, if it fails to break this 23.6 quite soon, then there's always going to be a likelihood that we're going to see a strong support being forged, which is going to then see price moving back up towards the price support and resistance levels higher, in particular back up towards this 0.95299 mark, which happens to be a very strong price support and resistance level in the past. So very, very, very important. If the US dollar is to be really, really negative against the Swiss franc, we would need to see a confirmed break below. Otherwise, be very tentative. I wouldn't, if you are trading this, be very, very aggressive with your entries and your stops, because we are trading at a major support and resistance level here at the 93. So I won't be looking to trade this until we actually see a confirmed decisive directional candle, either bounce, bullish engulfing candle close, which is engulfing all of this consolidation here, which would indicate to me that we should be looking for buying sentiment near term, or get a bearish engulfing candle close lower than the 930 mark, which is this 23.6, which would indicate to me that the US dollar is still looking negative long term, and we should be then targeting them at 38.2 mark down the bottom here, as I mentioned, which is a good 400 pips away. On to the last pair of the day, the US dollar Japanese yen. This particular pair rallying for so long, the US dollar has found a lot of positiveness against the yen, however, come unstuck recently, and what you've seen, as I mentioned, on the US dollar Swiss franc is exactly what's happening on the US dollar Japanese yen. All that momentum we saw the US dollar moving higher has now come unstuck as the Fed has announced potential tapering on the purchasing plan, the QE3 mark, and sure enough, prices have fallen from these dizzy highs back towards the 50% monthly retracement area, which was a major resistance level in the past. We're expecting the breakout, the pullback, and then we wanted to see some sort of consolidation here on the pullback, so we get a nice bullish engulfing candle to say the breakout, the pullback, consolidation, and then the continuation in the upside in the direction of the breakout. That failed to materialize. We saw a red arrow, candles went red as we saw this bearish engulfing candle closing lower, giving us indication that the price was still looking negative long term, and sure enough, prices fallen to the downside, not quite reaching the 38.2, guys. However, moving into a price support and resistance level here at the 96.73, and doing so, pretty much pulling back on those candles. And here you can see a very indecisive candle, but you can see more trading range at the top end of the candle at this major support and resistance level. There was bound to be some sort of pullbacks because of the breakout, and sure enough, you can see over the past couple of days, prices pulled or moved back to the upside again. So we are where we are currently trading now. So as long as it maintains below the 50 period or 50% retracement, our monthly 50% retracement areas now, which is meant to be the breakout, was recently resistance, then the breakout should have been support. If we fail to see price moving higher than that, then ultimately this is going to be the new resistance for the US dollar against the yen, and she's going to be pushed back to the downside. You can see the trend, very aggressive trend to the downside, a lot of selling. And is our indicator box telling us? No, there's a lot of blue and a lot of blue. It's very mixed at the moment now. We want to see the RMO and the institution moving average working collectively. So if this to be genuine negative, we want to see that very much indicating us on the charts. RMO is below the zero. MACD has been below the zero. If you look at it on a face value, we are in a negative trend. We have broken a major support and resistance level here in the shape of the 50% monthly retracement levels. And as long as we stay below the 50%, I'm always going to be looking for shorting opportunities, because the overall sentiment is swing lows. It's not making any higher highs, making lower highs, which indicates I'm in a downtrend. So therefore, and it's broken a major support and resistance level recently. So therefore, I should be looking for one of negativity intraday. So for our charts, let's look to see if you can see consolidation at there. You can see quite clearly a lot of consolidation at this point. So price not making any higher highs, and the last 4 hour candle bearish engulfing. So now we want to see a kick on to the downside, and our next potential target would be that all important area here at 96.73 is our first target. But ultimately back down towards we've broken the 50% on a monthly. We would then need to start looking at targeting the 38.2 level, which where price is trading right now to this line is a good 412 pips away. So there's a lot more, as I mentioned to the here again, there's a lot of profits to be made to the downside in the direction the trend is trading right now. So look for an opportunity to enter, stop above the price swing, which would be in this high over here, for example, and then target either the near term one, which would be in your daily, or go for the 4 hour, which is way down the bottom here at your 38.2 mark. That's it today, guys. Short and sweet. Please be aware if you are using this particular template to follow the rules of the actual indicator, but it also back it up with sound money management. And other than that, keep it as simple as possible. I'm not going to drag on. It's important that you just keep things keep things manageable. Don't over trade, and be very, 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 very good with your money management rules. Don't risk a lot. We are seeing some great opportunities that have presented themselves since non-farm payroll figures came out on Friday. So they are moving in the direction of the overall trend. So let's look for entries, keep our stop management in place, and then take a look at the next target. Otherwise,